Okay, good morning, everyone, and welcome to the Futures Market Reel. Today, October 1st, 2020, we will be looking at the S&P 500 E-mini contract for December. Before we go any further, let's take a minute and look at the risk disclosure for our trade room right here. So let's take a minute right here to read our risk disclosure. Right, trading a security future involves the risk of loss, including the possibility of loss greater than your initial investment. Security futures may not be suitable for all investors. Prior to buying or selling a security future, a person must receive a copy of the risk disclosure statement for its security futures contract. Copies are available from your broker or from the National Futures Association at www.nfa.future.org. This webinar is for educational purposes only. In no way should you consider this trade room to be a trade call service. If you choose to take a trade, you do so of your own accord. Bima the Trading Yogi is in no way responsible for your gain or for your loss. Sounds good? Excellent. So let's go back to our chart this morning. And just a second as I move forward. Okay. So first and foremost, how is everyone doing? If you guys can always answer and into the chat box or the Q&A box. So I hope you guys had a good night of sleep, and let's get going, right? So first and foremost, like we do every morning, and as we go along, you guys will see that this will become pretty redundant. As we go every morning, we have a series of questions that we need to answer ourselves to know whereabouts we're at and to find some trading opportunities, right? So today, what kind of day are we having, right? This is the first question. Anytime we sit in front of the computer, we ask ourselves to know which type of technical analysis to apply to our day. We need to know what type of day we're having right now, right? There's three types of day. We've got trending days, right? And what are trending days? Well, trending days is very simple, right? It shows us a definitive trend, right? That's a trending day. That the trend is bull, right? That the trend is bullish, or then that the trend is, oh, give me a second, right here, or that the trend is bearish, doesn't matter, right? The analysis applied to either or. So we have a trending day, we have range day, right? What are range day? Well, range day is when the market oscillate, right, between a range, right? So that is, oops, so that is a range day, right? Or we also have our third and last type of day, a trend, right? A trending day into a range. So what type of day are we having today, right? When I look at my chart right here, we see this morning, give me a second, let me adjust the chart right here, shave a little bit off, there you go. We'll go back here. So we can see today that we're having a trend, right? We have a definitive trend into a range. So this is the type of day that we're having right now, and we're going to apply our technical analysis accordingly, right? So first and foremost, where is our range, right? Where is our range? Let's grab our range tool right here. And this is where I have the feeling that we have our range. We're going to shave off the wick a little bit to make it a little tighter. right? There you go, like this. Even I think I'm gonna move it just a bit higher up to remove the bottom wicks. Yeah, that starts to make a bit more sense right here. There you go. Now that we have our range, the next thing we're going to do is we're going to apply our standard deviation, and we do so with our expansion tool. Now, if you're following with your charting software, on Sierra Chart, I use the expansion tool, and on NinjaTrader, it's called the same thing. So we use the expansion tool. We click at the bottom of the range. We go all the way up to the top of the range. There you go. And then after, we're going to look, right, because we've got a spike, right? We've got a trend into a channel, or a spike into a range, but we'll call it a trend into a channel. We're going to find where our 38.2 retracement. So then again, from the charting software, we grab onto our retracement tool. We click at the bottom of the lowest low of the trading session that opened up yesterday, right at 6 o'clock, the electronic trading session. We click at the bottom of the day's lowest low, and we go all the way up to the top of the day's highest high, right? So let me do this one more time so you guys can see how I did it on your screen. We click right here at the bottom of the, whoops, give me a sec. Click at the bottom of today's lowest low, all the way up to today's highest high. There you go. So this is an area right here that we would like to expect to see some buyers, right, waiting to take the market up. We have our Fibonacci retracement showing up where our zone of support is, right? Our retracement, where the buyers are waiting to take the market up. And we can see, right, every time that we've touched this zone right here at, oh, give me a sec, right there, at this spot right here, this spot right here, the market shoot right up, right? So we can expect a lot of buyers waiting right here for a pattern to happen to bring the market up. But then again, they might be a little happy to trigger happy a little too quick, and they went into the third standard deviation. Let's see if we're going to get our 38.2 retracement. So that is our setup for this morning, right? This is what we're expecting to see or to happen. Now let's hope that the market is not going to go without us. We're going to get a proper pullback, which is going to give us a nice pattern and then a nice risk reward ratio, right? If we look at today's highest high, right? Today's highest high right here, and then the lowest low, which is right here. Well, our risk reward ratio, right? If we get a pullback into a 38.2 zone, that gives us, right? That gives us a 21-point risk reward ratio, right? 21 point on the win side. And then if we look at our ATR is 1.71. Do you guys remember from yesterday, how do we calculate our risk reward ratio? Let's take a little minute right here, letting the market unfold and give us our pattern. We're gonna calculate today our risk reward ratio for now anyways. So let me grab my text tool. So right now our ATR, right? And what is an ATR? ATR is the average true range, i.e. our volatility index. There you go. So we use the ATR indicators to let us know where we're going to have to put our stop loss. And how we do so? Well, very simple. We take our ATR, and right now, if we look at the ATR, right here at the bottom of your screen, if you look at the ATR is at 1.8 right now, right? And it fluctuates throughout the day as the day goes on. It changes, as you know, like any indicators, with which every candle that happens. So we take our volatility index ATR of 1.8 and we multiply that by 1.5, right? So 1.8 times 1.5 gives us, right, equals to 2.7 points, right? 2.7 points, or, right, or times 4 ticks. Whoops, sorry, 4 ticks. So 2.7 points times 4 gives us 10.8. 10.8. Whoops, 8. So we're gonna round it up to 11. So we need 11 tick for stop loss today, right now at a 1.8 ATR, right? Right now, I just went back to 1.7. So as you can see, it fluctuates as we go forward. So, and just give me a second, guys. I will be right back with you. So anyways, that being said, we have 11 ticks for our stop loss, right? So we've got right now, if we're looking at this move right here, right? If we get our 38.2 retracement, we see right here a risk reward ratio of 21.25 points profit for a, if we look at the bottom right here, a 2.7 point risk, right? So that means, right? That means that we are risking 2 points to make 21 points. Does that make sense, guys? Do you guys understand what I'm trying to say? Let me open this up right here so I can see you guys' comment. There you go. Nothing so far. Anyway, so I hope I'm making sense and you guys understand that this right here, right? This right here, the let me grab, right? This right here is our risk that we calculated with our ATR, right? And then this right here is our reward that is calculated from taking the retracement of 38.2 that you see right here, that is reinforced, right? That is reinforced with our zone of support, right? We see right here, we've got a zone of support right here again. And then after, to top it off, right here, right, we have what is called a open loop, right? Right here, this is a open loop. And the market will try to close that loop at some point today during the session, right? At some point, we're going to see a retracement all the way down to 38.2 before it offers us a pattern, right? Once it gives us a pattern, then we can look for our entry. So I hope this made sense for you guys this morning. And now as we can see, the market went back into the range, right? And you're always going to be careful. The range is something that we always have to be very mindful of. And we always need to mark it because the range will act like a magnet, right? The range is going to act, and just let's take a second right here. I'm going to go ahead and save. Perfect. So this is saved. I just want to see where it, okay, there you go for today session. That is awesome. Yes, the range will act as a magnet, and over time, you will see, right, that this is what the market might do today, unless it rejects the range and starts to move into a trend. But you can very well see the market go up like this, right? And then play a little bit around, and then after come back down into the range, then go back down to the retracement, right? And then after go back to the range, down to the retracement. So always be mindful of the range. The middle of the range, this is where volatility takes place, right? And we know that volatility is not good for a professional trader, because when we have volatility, we don't have confidence in what the market is going to do, and more than often it will just kick us out, right? It will hit our stop loss, and then after go back in the directions that we previously thought it would. So again, this is a weightings game. Now, yesterday during the trading session until 8 a.m., we did not have any trades, but at 8:10 and at 10:30 West Coast time, right, or around 11 o'clock, around 11 o'clock Eastern Standard Time, we got two good trades, right, for 10 points on the day. You can always go to my YouTube channel if you want to see. Give me a second. I'm gonna go get it right here. If you want to see those trades and how they were executed. So let me take a second to go to the channel and then grab the trade. I'll post my channel. I just saw I put the 3-point scalp, but I didn't put the 7-point trade. So I'm going to upload it after the class this morning. There you go. So you guys can look it up. You can also register online, because every time I'm going to do a live trade, I'm going to record it and I'm going to post it. Winner or loser, doesn't matter. I will be posting it. So back to our chart right here. Again, it's a weightings game. This is what we have to do right now, is we got to wait for the market to give us something worth trading, right? And there's no point for us to try to force a trade into the market. This is when we start to lose money. As Jonathan yesterday said, I'm sorry about that. As Jonathan said yesterday, sometimes the best trade is no trade at all. And it's true, right? Because we can, and it's easy when we first sit in front of the market, in front of the scope, and we look at our dome, and we, at first thing in the morning, we'll stay very disciplined, right? Very easy in the morning, we'll stay disciplined. But as the day progresses, we start to get antsy, and then after we start to, and we call this behavior is called confirmation bias, where we're going to start to look or manifest confirmation in our mind just to give us an excuse to get into the market, with the gambler mentality of, well, let's just see what's going to happen, right? And this is really no good for us. So we're gonna wait here. We're gonna wait idle on the sideline, waiting for the market to give us something good to trade. And in the meantime, right? In the meantime, we can always grab our diary, right? We can always grab our diary. Give me a second here. I'll show it to you guys. There you go. So we always grab our diary, and then we go to, and then we start putting in our thought, right? And let's make a little template for ourselves this morning. Just give me a second. There you go. Let's make a little template that you guys can use day in and day out to know exactly what to be looking for, right? So instead of calling it Dear Diary, we're going to call it our trading diary. Oops. Traders. No, trading diary. Yeah. There you go. And in our trading diary, right, is we're going to put in the first thing when we sit down is today I feel, then we're going to fill in those blanks, right? To my observation for today's market condition are, and we'll fill that. My goal for today's are, we'll fill that. Then after, I have to be mindful of, fill that. Oh. Be mindful. Then after, what I need to improve and what I have improved. There you go. There you go. Give me a second right here. Let's copy this. And I will be putting this right here in the chat box, right? There you go, into the chat box. You guys can copy this, and you can open yourself a Google Doc Word document, or a text document, or download yourself a diary application, whatever you want. It's no problem, right? And the name of this template, we're going to call it the Traders template. Well, just Traders, right? There you go. So with this, we're going to start our diary. We don't need to finish it just right away, but we do need to get it going. So today, I feel a little tired. So, and why am I stating how I feel, right? Well, it's very simple. When you know how you feel, well, you know what is your internal condition, just like the market condition. And you might realize over time that on days that you are tired, you start to take gamble trades, right? This is one of the things that when I get tired, I sort of like get bored in front of the scope, and often I just like want to trade to get it done and go away, right? So to know that I am tired, I have to be mindful of my decision making process. I will drink lots of water and reassess. Is that how we say that? Reassessed. Reassessed. and reassess my condition over the morning. Right? So I know I feel a little tired today, and when I feel tired, I'm not always taking the best decision. So I will be paying attention to that, right? Then after today's market observation for today's market conditions are, right? My observation for today's market conditions are a trend into a range day, right? And for a trend into a range day, I know I need my technical analysis will be, right? Find the range, trade into the trend, meaning that we're looking for a long position, right? Buy a long position for the bulls to buy the market, not to sell the market, right? And then after, my goal for today are to be as sharp as a surgeon. And then after, we're going to keep on going with our journal a bit later in the morning. We'll bring back our chart because right now the market might give us something worth trading. We'll wait a little bit, right? We want the market to retrace around the 38.2 area, right? We want the market to come back down here and then after give us a pattern, and then after take the market back up, right? So those are the goal for this morning. Let's see what the market going to do right now. Just have to be careful, right? Because, well, not careful, but the market could very well go without us right now because when it reaches here, a couple times, it just shot right back up. So we got to be careful about that. But we just hate it, right? When the market just go dead like this for a few seconds or minutes. At the edge of your seat, you're waiting to be able to pull your trigger, and then it just dies down, right? Because this movement right here, right? This one right there happened really, really quick, right? Couple of minutes, 2 minutes, this movement right here, and then it just dies down. So are we going to get our pattern this morning? Again, in the meantime, if you guys have any questions, don't be shy. Type them into the chat box or the Q&A box. So right now, the market is going to try to close this loop right here, right? We have a small loop opened up right here, but we also have this one right there, right? We have this one right there that has not been retested yet, right? They did not close this loop. There you go. See, that's what we want to see. So we'll remove the trade lock. So one thing not too great right now is we're close to the 10 o'clock shock, right? 10 o'clock shock are usually not a good time of the day to trade, or actually never a good time of the day to trade. And in our trading plan, we do not take trades at 10 o'clock. So let's hope that it's going to give us our trigger, our signal before 10 a.m., right? And then we'll trail our stop very close, and if not, then hopefully just a bit after 10. There you go. So we're getting close to our 38.2 zone. So are we going to get our pattern? We've reached our 38.2 area. Now, because this market, right, this we're going to do a little bit of analysis here. We can see that we got a strong move down, right? Very strong move down right here. So what we would like to see right now to feel confident to be able to get into the market, right, would be something like this. This is something that we want to see to be able to feel confident to get into the market. Right? Because right now, this could very well be a reversal, a strong push down, and then it just keeps on, right, crumbling down all the way. But we got to be mindful of this, keeping an eye on it, making our right analysis, and then applying our trading plan. And let's not forget that we did not close, right? We did not close right here the loop just yet, right? The loop is still into play, right? We can see right here that it did not retest right there. So 3 minutes before the 10 o'clock shock. Hopefully the pattern will not happen right at 10 o'clock. That would really suck. Sorry about that. So once they close this loop right here, right? Once they close this loop right here, what will be the market objective, right? What will they try to achieve once they've closed this loop right there? Can anyone say? And if you said the previous high, you would be right, right? This is where the market is going to try to go after it closed this loop. It almost did. It's almost there, right? Almost. Didn't retest just yet. Still have a point or two before it can close it. There you go. 10 o'clock on the dot. What is going to happen, right? What are we going to see? Is the market going to reject, right? Is the market going to reject this area and it's just going to keep on tumbling down, right? Or are we going to see a pattern come up? It's not looking good. It's not looking good for the bulls. Right? Some news came out. Were they bad? Did we get some bad news this morning at 10 a.m.? Let me just go check it out right here. What did we have at 10 a.m.? We had the home sale report. We had the investors report, right? Prior was 5.9. Consensus, sorry, was 3.1. We were expecting between 2.2 and 4, and we actually got 8. So that's actually pretty good. Not sure why it did that. Let's look at the State Street Investor Confidence. No, I don't think. Oh, the petroleum report. No, that is at 10:30. Right, this is at 10:30. So I'm really not sure what happened right there. But again, it might just be the bears trying to take in a little bit more profit, and let's see if it's going to give us a pattern, right? This is what we want to see right now. We want to see a nice pattern. We want to see the market right now come and retest this area, right? This is what we want it to do, and then give us a pattern to go out again. And then with our luck, it could very well just run without us. There you go. Let's see what's going to happen now. All right, she can give us a nice pattern here. That would be awesome, right? If you can see a very nice pattern here, that would be the best. So let's see what's going to happen. So it's good. 10:05, right? The 10 o'clock shock has been completed. So now we can feel confident that if the market gives us a pattern, we can take this pattern with confidence. Again, in the meantime, guys, if you have any question, please type them in the Q&A box or the chat box. It always helps to get the class move along when you guys ask some questions. I'm always happy to answer them. All right, we're going to come and test this right here. And there, do we have, right? Do we have buyers right here? We just got a trap, small trap right here. And then will this be confirmed? Do we have buyers waiting to push the market up, giving us a pattern, and then we can take it back up? Could be a 2-try pattern, right? It could very well be a 2-try pattern. 1 try right here. 2 try right there, right? Maybe. Let's see. It doesn't look good, guys. It does not look good right now. If we go any lower than this, we're going to have to start to look for, we're going to have to change our analysis and then transition into a trending date for the bears, right? So let's see what's going to happen, right? Let's see what she's going to pan out. You see right here, we have a double bottom, right? We got a double bottom right here, indicating us that our buyers might be right here. Let's see if they'll be able to defend this zone, right? Let's see if they can defend it. if we look right here, right, our ATR is 2.0. So give or take about 12, 12 or 14 ticks for our stop loss. So we got to be mindful of this right here, right? We're getting a bit more volatility. Now let's see what she's going to do right here. Now, see that this candle did not close over the EMA, right? This candle did not close over the EMA. So we did not get into the trade. If this candle would have closed over the EMA, there's a good chance I would have brought in my my order to see if we. I would have waited a couple of seconds, right? Because look at those big movement, right? This big candle, just to see if it would retrace. But right now, what I'm looking to get into the contract, into a contract, would be a strong candle over the EMA, but we're so far down right now, then I'm afraid, I'm not sure that it's going to give us what we want, but then again, it might go without us as well. So very frustrating condition right now. And look how ugly this is, right? Look how noisy and ugly this is. So right now I'm going to pull off my order. I don't feel confident at all that this is going to go how I want it to go. As we can see right here, right? As we can see, the bears rejected this area right there, keeps on pushing back down. The bulls are unable to defend their position. So right now, I think we're going to start to look for a sell position, right? We're going to change our analysis. And I'm going to just do a few, just give me a second. I'm going to do a few changes in the meantime. There you go. So take this off. Take my ray tool, right? Draw my channel. Come back here. There you go. Then after Fibonacci retracement, oops, this right here, we should take this as well off. There you go. Now take my retracement tool, go on today's high, bring it all the way down to today's low. Grab this right here, move it on top there, take it, change the color. So this is what we'll be looking for right now, right? We see all this bearish movement coming all the way down. So we're going to look for the market to come and retrace to the 38.2, right? At the same area as this zone right there and this zone right there. We can expect to be a lot of sellers in this area right there, right? So we'll wait for the market to give us our pattern, and then after to take the market back down, right? That is our job. Most of our job as traders is going to be to wait on the sideline for the right opportunity to rises up. So let's see what's going to happen there. Okay, that was a little crazy move again, hey? Now, when we see movement like this, right? When we see movement like this, we got to be very careful, right? Because we'll see this and we're going to be, because it moves so fast, we're going to fall into the FOMO um, condition, right? The fear of missing out. We're going to see the market go give us one, two, three big candle. We're going to be, oh, geez, we're going to get into it. We're going to feel good because of that one. And then very, very quickly, the market could just very well coming crashing back down, right? So we got to be careful to keep our state of mind sharp, and even when we see movement like this, that we do not get caught into the FOMO. And we wait patiently for our pattern, right? We're professional traders. We're not amateurs. We know our job. We know what we need to do. And one of the golden rules of trading is we do not need to be trading every day, right? That is a golden rule to follow. We do not need to take a trade every day. Now it's fun, right? There's weeks and there's even been months where the market gives us patterns almost every day. It gives us pattern almost every day. But that being said, it's still not an excuse to try to get in the market just because you're getting anxious, or you just want to pull the trigger because you want to get that rush, right, of being into the market. So anyways, that being said, let's wait to see what the market is going to do in the meantime. And again, if you guys have any questions, something you want me to elaborate on in the meantime, that the market gives us something worth trading, just let me know and I'll be right with you. And right now, what we're going to do is we're going to bring our journal back up. All right, we're going to bring our journal back up. And we're going to go to right here. Advance. Okay. Find the range. Okay. So right here, we're going to put in at 10:10. The market went from trend into a range to a trending day. Now we are looking for a short position. The technical analysis for a trending day, right? Find the channel. Find, 38.2% retracement. Find reversal lines, zone of support, and resistance. There you go. So back to our chart. There you go. Perfect. So now we can see we do have a area right here, right? This zone. Let's grab this tool right here. We have this zone right here of conflict, right? That we're getting some resistance. We'll see if it's going to hold. Do we see any reversal lines? Let me see right here. Do we see any reversal lines? Got we don't have reversal line, but we do have resistant lines, right? Right here we have resistant lines. And those resistance lines are just fuel for a short position if we ever got a retracement all the way up to here. But if we did, then that would just tell us that we reversed and we're back into a range day, and this was just like a 6 or 7 standard deviation position. So anyways, let's see what's going to happen. We have right here an open loop, right? Whoops. Right here we have an open loop. Right here we have resistance zone. There is our 38.2 retracement, what we're looking for. And this area right there is where we would expect the pattern to happen. 7:20 on the day, 40 minutes left to our trading session. We can see right here, we're starting to see a rising support line. This we need to be very careful of. Here, we're starting to see a rising support line to be mindful of, right? Just got to be careful that they're not going to come up and then retest and retest and retest and retest, right? So just let's be mindful of this rising support. Holy smokes, look at that. Okay, so maybe it's going to give us a pattern soon. Let's see. All right, I'm going to get my order ready. Let's see what it's going to give us. Let's wait and see. can look at this as try number one, right? Let's erase this. Let's go range. We see something a bit better than this. We're gonna put it white, and we're gonna use 12. There you go. Oh, there you go. So, holy smokes. How am I to get into this? Oh, that sucks, right? Sorry about that. I looked at this big move right here, and it's really upsetting because we were looking for our entry, and now it just went way without us, right? It went way off without us. Did not even give us time, right? Did not even give us time to get into it. If this candle right here would have been like that, right? Give me a second. If the candle would have been like that, then I would have right away gotten into the position, right? Our order was ready and everything. But now, if we look right here, right? If we look at how much risk we were taking, we would have, give me a second, there you go. From this candle to where our stop loss would have been, it would have been 26 ticks. 26 ticks, that's way over what we had calculated before on our ATR of 1.8, right? We were willing to risk 11 ticks, right? No more than 11 ticks. And right now we just got a candle that put us in a position of risking 26 ticks for a reward of 17, right? 26 for 17. So we were risking, right? We were risking 26 point to profit 16 points, right? To profit 16 points. So this right there as a risk reward ratio does not make sense, right? This right there, looking at this, does not make sense to want to get into a trade to risk 26 ticks to maybe, right? Maybe make 16. So for that reason, we're not into, we didn't get into the trade, right? It's really too bad because that's all we were waiting for was for the pattern to complete itself. I was about to show you, right? The first try, whoops. The first try right here, second try right there, right? And then all we needed was for the market to give us our proper entry. But now it went without us way too quick, way too quick. So that's all right. I mean, the day's not over. It's 7:30. So, sorry, 7:30, 10:30 Eastern Standard Time. So that means from now on, for the next half hour, we only take picture perfect trades, right? This one was not picture perfect, but it was giving us a pattern. Now that pattern, we could have traded it if that candle right there was not so big, right? If this candle right there was not so big, or, right, the other thing we could have done is if this candle right here would have retraced, and then after we could have put in a limit order and get into our trade, right? But it kept on going and whatnot, so it negated our entry point. And right now we're going to wait for the market to again go all the way up to our 38.2, give us our pattern, right? And then after get into our position. We've got 30 minutes left for it to do so, and it might do so yeah, I might do so within the next 10, 15 minutes. If not, well, that's okay. We didn't lose any money today. That's always a good thing, right? It's always a good thing to not lose money. Tomorrow, the market will still be there and there will be some more opportunities for us to get into position and make some money. Now, in the meantime, any of you guys taken any trade? Did anyone take any trade this morning? And this is a waiting game, right? So what can we talk about in the meantime? We might have a few minutes. Let me just look at some of the stuff we can discuss. Yesterday, we talked about trade management, right? And for risk reward ratio. If you guys want to get back to that, you can always go look at my, you can always go look at yesterday's video after this trading session. And yeah, see the information about the risk management. Sorry, I'm just going through all of the what do you call it there? I'm going through all of the subjects we can talk about, all while keeping an eye on the market. We can see right now it's retracing almost to the 38.2 area. The only thing right here is I'm just wondering, just give me a second, if we're not getting a new range right here, right? It's starting to look like we're starting to see a new range right here, right? Erase this, move this like this, shave off the wicks. So yeah, right here, we could be having a range right there forming. So let's keep an eye on that, right? Let's keep an eye on that. And there you go. Let's just make it a little bit less visible, because it might not be a range just yet, right? It's just something we need to keep an eye on. So we're going to get a pattern. Right? This is what we're looking for right now. We're looking for a pattern. Let's see what's going to happen. There you go. Now we've reached our 38.2. Let's see if we're going to get our pattern, right? We want to have at least a 2-try pattern. All right? 1 try, 2 try, looking for an entry. So is it going all the way back up again? No, maybe. Okay, on the news right here for the S&P, it says the U.S. stock Wall Street rises on stimulus bet as labor market rebound. So we might just see a reversal right here. Let's be mindful, pay attention. Wow, that's a crazy, crazy morning, right? We went from a range into a trend into a range. Then after we went into a trend, a bearish trend, and now we might see a reversal going into a bullish trend, right? So let's keep an eye, see what's going to happen here. Right? 38.2 completely negated, right? Just blew right past it. Didn't even show, like this guy right here, right? We see a small little battle right there, right? See a small little battle right there. But other than that, the 38.2 was completely blown off. He kept on going. So now we'll see. We'll see what's going to happen. We might have to redo all of our analysis again, right? We might have to redo all of our analysis again. So let's start at it. See if I'm right. Right? Let's see what is going to happen. Let me clean up the chart a little bit. There you go. So now we've got our spike. Now what we're going to wait after we get the spike, we're going to look for our pullback. Once we have our pullback and it's going to start moving forward, we're going to be able to draw our trend line, right? And then after we have our trend line drawn, we'll be able to look for a pattern to be able to get into a long position. So let's see what's going to happen here. Oh. So we're going to wait for a pullback, right? We're going to wait for a pullback from here. Oops. Nope, not from there. It just keeps on going, right? $7.40 on the morning. Let's see what's going to happen here. Okay, so in the meantime, we're going to talk a little bit. I know what we're going to talk about. We're going to talk about right here, what mechanic, right? What happened in the back scene of this move right there, right? Let's talk a little bit about the market psychology, right? Give me a second right there. Okay, so we see right here, right, this big movement, right? This big movement right there created a FOMO condition, right? Right here, we see this big move going back down. then right there at this candle, we see that there was a lot of buyers trying to defend their position, but at the same time, there was a lot of sellers getting into the market, right? The FOMOs, the one that saw this big candle was like, oh no, I'm gonna miss out. I gotta get into it right away. I gotta get into it, right? And you see this candle right here, this candle right there. This is people selling the market, right? They're trying to capitalize on this big candle right here, right? So they keep going down, they keep pushing it down, but then after the buyers defend their position, they said, no way, right? This candle right here, you see a big flux, a big volume of trader getting into the market. Then the sellers, well, they see a pullback, right? The one, again, the FOMOs, the ones that were not able to get in right here, and they see this candle and this candle, they're like, oh no, I should have gotten in. They've put their order right there, right? They've put their order right here. And then after, again, you see them coming back down again and coming back down again. And then right here, you see the buyers really defending their position, right? And with this candle right there, this one right here, all of them right there, right there, right there, right there. But what happened with this one and this one, that one right here? What happened with those candles, right? What made the market move in such a big movement? Well, that's where it gets very interesting, right? Because see, the people that put in their buy order right here, right? They've put their stop loss, whoops. They've put their stop loss right here, right? So once those stop loss gets hit, right? Once those stop loss starts to get hit, well, this is what you see right there, because when you're on a short position and you put your stop, what is the order type that you've put in, right? You've put in a buy order. If you want to close your short position, you need to send a buy signal to close your position, right? And that buy signals is what shot up, right? Like a catapult, this movement right here, right? These two big candles right there are stop loss getting hit. Then after right here, this is the FOMO getting hit, right? People seeing those big candles right there, like being like, oh my God, I didn't get into it. Now the sellers try to defend again their position, unable to. Then you see all the buyers getting into it. And right here, those candles right there, I wouldn't be surprised if those ones were also stop loss from those the guys right here trying to defend this area right there, right? So this is my take on the movie reel that this movement done this morning. Did that make sense to you guys? Do you guys understand what I'm trying to say? And again, if you guys have any questions, don't be shy. Fire away, ask them in the chat box or the Q&A box, and I will be right with you to answer them. So now right here, we see that we are plateauing right now, right? That we have the sellers defending this area right there. So what we're going to do right now is we're going to put in our retracement tool to figure out where our 38.2 is right here. Just give me a sec. There you go. We're going to put it our 38.2, and now we're going to wait. As what it is, a waiting game, right? We're going to wait for the market to come here, produce a pattern that we can trade. 7:45 on the morning. We don't take any gamble trade past 10:30. Not that we take gamble trade on any given day, but we might be a little looser with our rules. We might adapt ourselves to the market condition to find the right trade. But past 10:30, it's the time that all the professional traders walk away from their desk, for the simple reason being that we are traders not to spend our whole day in front of the computer. We want to get in, do our job, get out with a profit, and then enjoy the rest of the day. So right now, we're past 10:30. All of the professional trader walked away from their desk, and right now the ones that are left are the ones that did not make money or the one that lost money. And the people that lose money often will get into a gambler's mentality, right? This trade has to be a winner. So for that reason, we have to be careful, and we do not take any gamble trade past 10:30. Now, all of that information, all of those rules that you're hearing right now, they don't come from me, right? They come from my mentor. Before I had my trading mentor, I blew 2 accounts, and then after losing all of my money, I asked myself, if one day I had the money again to be a trader, what would I do? Well, to be a trader, I would I would take the proper course and mentorship necessary to be a profitable, right? Because if you want to go to Rome, you're better ask someone that's been there before, right? No point in asking someone that's never been there. All of those YouTube's video gives you great information, but don't give you the last stretch you need to become profitable, right? And for that reason, if you guys are ever interested, you guys want expand your knowledge base, or you really want to get into trading, you want to take a professional course, then send me a message, right? I'll put in my email right here. Send me a message, and I will forward you all the information you need to get in contact with my coach and register to his class, right? Because this trade room will take you only so far. But there is some information that you will need to be able to be profitable with your trades. And I strongly suggest that if you do not have a mentorship, if you do not have a coach, that you either get yourself one, or you contact me and I give you mine information, right? He's been doing this for 15 years. And I couldn't have been more happy with the course that I've taken with him so far. So that being said, 7:45, let's wait to see what's going to happen. At the same time, I'm keeping an eye on my stocks. And let's hope that the market gives us our pattern that we're looking for. Getting back to the 38.2. And now we got to be very careful. And here's I'm going to tell you what I'm seeing right here, right? We could very well reach that 38.2 and then shoot right back up, right? We could very well hit that 38.2 and shoot right back up from there. But at the same time, and right, we're still around the 38.2 area from that big move down, right? We're between the 38.2 and the 50%, right? Let me put the 50% line and 61.8. There you go. And then let's extend the drawing. There you go. So we're between the 50 and 61.8. And often when we see a big move, right? When we see a big move like this, we'll often see another big one going all the way down, and that big move, instead of going to the 38.2, might retrace to the 50 or the 61.8. So for that reason, we got to then again be very careful and wait to see if it gives us a pattern, right? Those V bottoms are the hardest to trade, and I do not suggest that you guys get into the habit of trying to trade V bottoms or V top, right? Because they don't give us patterns to get in. I don't know if you guys saw any entries, but I did. So all of these that you see right there is simply FOMOs, right? There's simply people that are afraid that they've missed this move right here, right? They've missed this move right here. So they want to make sure that they're not going to miss the next one. So what they do is they get in without even a pattern, right? But that pattern could very, very, very well be a trap for the buyers, right? For the buyers that gonna use those sellers as fuel as when we start to go back up, right? We're gonna hit their stops. And every time we hit their stop, it's going to be like jet fuel catapulting the market to the higher highs, right? So we got to be mindful right now. We're a little bit of the limbo where either scenarios can very well happen, and we got to be careful about that, right? So let's see what's going to happen here. Right? It didn't even touch, it didn't even get to the EMA. It didn't even get to the EMA. It didn't even touch it. And then again, back down, right? Those again, that movement that you see right here, this is another FOMO movement, right? That you've got a bunch of trigger happy people putting their order right here, waiting it to get touched, and they put it a bit lower than the EMA to make sure they get filled, right? And this movement might look very enticing right now, but like I said earlier, don't get into the habit of getting into those trade without a pattern, because they could very well just reverse, and then we'll see another melt up, right? So let's be very mindful and careful about this right now. I know it sucks. I know we want to get in. I know we want to make in some money, but it's better to stay idle, wait for the right patterns for the proper risk reward ratio, than to take a gamble trade and get stopped out. And then when that happens, the day just goes to crap, right? Really, really quick, it goes to crap. So now we get our first try right now, right? We got our first try right here. Give me a second. First try right here for the bears. I'm gonna wait for another try right here for the bears, and then hopefully the pattern candle closing over the EMA so we can take it back up. Hopefully, or this could be also no, that's the first try, right? This is the first try. Give me a second. Right there, right? This is the first try. This is the first try for the bears, right? So that one right here, first try for the bears. This one here is the first try for the bulls, right? So we would like to see the market come back down, give us a second try back up, green candle over the EMA, strong green candle over the EMA, trigger confirmed with our MACD and RSI to be able to get into the trade, right? During the morning session between 9:30 and 11, I do keep an eye on the RSI and the MACD, but they are not mandatory. But once we are past 10:30, there's no more gamble trade. It has to be picture perfect, and for the trade to be picture perfect, I need to have a trigger over the RSI, and this right here could very well be a trigger order. I'm just going to shorten. I'm going to bring down my order to only one contract, right? I'm going to put in just one contract because we're past 10:30, and past 10:30 often we will see some volatility get into the market, so we could get stopped out. So for that reason, I always, not always, but for the market condition that we have right now, I bring my position smaller from a 4 to a 2 or a 1. And right now, I'm going to keep a 1 contract position for this trade if we do get into it, right? We see right here, we've got our movement. I would like to see, right? This is what I would like to see right now. right? That would be the pattern for us to get in. And again, if you guys ever want to learn about all the patterns that I trade, those don't come from me. They come from my mentor, my coach. And if you want to have his contact info, if you want to talk with him, let me know and I will give you all of his information. Just put in your email address, or actually just click on raise your hand, right? Just click on raise your hand and I will send you all of his information so you can get in touch with him, right? $7.55. 5 minutes left to our trading session. Let's hope she's going to give us what we want. Where is my EMA? So give me a second right here. Right, the EMA is right there, right? The yellow line that you see, yellow line is my 21 EMA exponential moving average. And look at that right here, right? This pattern just crumbled down, giving us nothing worth of a trade. So I will pull off my order, right? I will pull off my order and wait to see if it pans out anything else. And Sean, I hope this, do you see the EMA, Sean? Do you see the EMA right here? Perfect. So this is what I was waiting for a strong, right? I was looking for a strong green candle right from here, right? If it would have reached that part and would have given me a strong green candle right here, I would have put in my order right there. I would have dropped my order right there, put in my stop loss right here. Then after my first target for my first target would have been a 1-to-1, right? A 1-to-1, and this I calculated like this. I grab the size of the setup to the size of the entry, and this is where I put my first target. If I would have had two contracts, I put my second target at the highest high of the previous move, sorry. And then after, whoops, if I move, not everything moves if I move. And then after my last stop, I would have put it like for the runner for the day's high on top right here, right? That's how I would have managed the trade if it would have panned out the green candle I was looking for. So 2 minutes before we close the room right now, guys, if you have any question, now is the time to ask them, right? If you guys have any question, now is the time to ask them. And in the meantime, right, in the meantime, if you have your charting software open, I want you to go into your trade order window, right? Your trade order window right here, and make sure that you have no pending order. And just for the heck of it, let's click on cancel all to make sure that we have no pending order in the meantime. And then after, I hope that you guys take a minute, walk away from your computer screen, go do some exercise. For myself, I'm going to go do some yoga. And if you trade in the afternoon session, please be careful, Ray, okay? Because right now I'm looking at the morning session and we're not even at 700,000 contract traded, right? We got some good volume this morning, but then it died down, right? Once we've reached this area right here, once we've reached this area, it started to die down on us. So be careful. The market might be very volatile, as we can see, right, with these big, huge candle this morning, bring some volatility. And if we look at our volatility index, we went from a 1.8 to a 2.3. So please, guys, be careful, protect your account. Remember that sometimes no trade is the best trade to do for the day. Until then, you guys take care, and I will see you tomorrow morning at 6:20. I will open back the trade room. Until then, guys, take care. Have yourself a wonderful day and take care. Bye-bye.